platform to other platforms and trade services, bringing your customers a new world of possibilities. This is what Proxtera can do for you. Let's take a closer look at Neha, one of your customers. Neha, like many others, owns a local business, a sundry store that sells daily necessities. With COVID-19, it's been difficult for her to get milk powder and other new products from her existing suppliers. Neha feels like she has no other options. Now let's reimagine Neha's story with Proxtera, the power of a global reach. By connecting your platform to Proxtera, you can give Neha options. Now, as Neha searches for milk powder, she is presented with a world of opportunities. Opportunities you have brought to her through the Proxtera network, all filtered to what she wants, all relevant to what she needs. Neha's options have just been expanded with new suppliers on other platforms, both locally and globally. She is now able to find the right product for her customers, and more importantly, at the right price, through you. By connecting your platform, Proxtera enables Neha to connect with other platforms beyond yours. It also doesn't stop there. Proxtera also helps overcome financing, logistics, and payment challenges faced by your customers. So connect to Proxtera today, and you will find that there is nowhere in the world that's out of reach. Proxtera, bringing the world to you.
Well, thank you, and welcome back. I'm Manisha Tank, and I just want to extend huge thanks to Gabriel and the Block Show team for bringing us more details on the progress in the digital currency space. I wanted to give you a few additional details about Block Show. It is the leading platform for all things blockchain and crypto related. The aim of Block Show is to showcase the industry's most groundbreaking solutions and bring businesses together for the benefit of all. Totally understandable. There are lab crawls, meanwhile, happening throughout the Singapore FinTech Festival. You can join Accenture, host a 24-hour-long global lab crawls where they'll bring you to Accenture Innovation Centers, studios, and labs across the world. MasterCard also has a series of lab crawls. They're running live across the whole week. Attendees can deep dive into everything from how MasterCard harnesses big data to reimagine city design. That sounds fascinating, to how they elevate the consumer experience to the next level of personalization. Well, we are ever so grateful that you're all with us, but we are going to switch streams right now. So I'm going to wait right here while I ask you to please refresh your systems, refresh your browsers, refresh your event pages. As we switch streams, you will see the screen go black for a short while, but we will be back online with you very shortly.
Where would your business be if you can reach more people, bigger markets, the world? Where would your business be if you can take it beyond borders, towards success, towards endless possibilities? What would happen if you can have the entire world at your fingertips? The new normal requires a new solution. Proxtera, bringing the world to you. Where would your platform be if you can reach new customers, bigger networks, the world? Where would your platform be if you can take it beyond borders, towards success, towards endless possibilities? Imagine One connection, multiple markets, endless growth. The new normal requires a new solution. Proxtera, bringing the world to you.
Hello and welcome back. I'm Manisha Tank and you are watching live coverage of the Singapore FinTech Festival here on the Global Common channel. Now to a subject that is very dear to my heart. As a woman in business, and I own my own company, it's all about unleashing the power of women-owned businesses. I am very excited to introduce the next presentation by Sallie Krawcheck, who is Chief Executive Officer and founder of Ellevest. It's a digital-first, mission-driven investment platform for women. And before launching Ellevest, Sallie built a successful career on Wall Street. She was the Chief Executive Officer of Merrill Lynch and also the Chief Financial Officer for Citigroup. In her presentation, Sallie will discuss how the impact of women-owned businesses is more than just moving the diversity index. It is also a catalyst for wider structural recovery. Excellent points. So let's go live to Sallie Krawcheck to hear her thoughts on unleashing the power of women-owned businesses and how they can grow the more than $33 trillion female economy.
Manisha, thank you so much. It's such a pleasure to be here with all of you. Good morning from New York. Good afternoon, good evening, depending on where you are in the world. And I'm so happy to be here with you today and so sad that we're not together in person, but next year, I hope. So I am here to talk about my absolutely favorite topic, which is women and money. When we get, we talk a lot about the emerging markets and the power of the emerging markets to drive economic growth globally. The largest emerging market in the world is women, and women today direct 85% of consumer spending. We control trillions and trillions of dollars of investable assets. We can be massive drivers of the economy. But today, women are actually moving backwards. When it comes to the amount of wealth that women have, we were moving backwards pre-pandemic, and certainly in the United States have been moving backwards even more quickly. FinTech has the opportunity to unleash the power of women. Startups have the opportunity to unleash the power of women. But today, women-run businesses in the United States of America receive just 3 to 5% of startup dollars. This, by the way, is despite the fact that the research will tell you that women-run businesses actually outperform those run by our male friends on the order of something like 60+%. But because of inherent biases, because of the way we've been socialized, when we think about a CEO, we think of a startup entrepreneur, we tend to think about, at least in the United States, a man. It's even worse in FinTech. And that in FinTech, over the past 10 years, women have received just $1 of venture investment for every $99 that men have received. And I suspect the reason may be something that some of you, and that certainly I, had in reaction to when you just heard about Ellevest. When you heard, oh, look, Sallie was the CFO of Citi. She ran the Citi Private Bank. And now she's founded Ellevest, a digital first. We started as an investing platform for women. Now we're a fuller financial platform for women. You probably had the same reaction that other people did, that I did, which is, oh, that's cute. That's really sweet. Women getting together, having a glass of Chardonnay, talking about money. That's very nice, but a little bit junior varsity. And, this business will never be particularly big because the perception we have of women, at least in the United States, is, well, women don't invest as much as men do because they're more risk averse, because they're not as good with money as men are, because their husbands are better at it. And so therefore their husbands manage the money of it. And, if all of that isn't enough, then recognizing that there have been initiative after initiative, some of which, by the way, were at Citi when I was there, Women & Co., to work to get women engaged and involved with their money, but they haven't worked. And so this is cute, but there's a big but. And the big but is that as I thought about founding Ellevest and had all of those objections that many of you probably had, I said, but it's worth keeping in mind that only good things happen when women have more money. We've talked about unleashing the $33 trillion of economic growth that can exist. But in addition to that, when women have more money, society is fairer. When the wealth gap closes, society is fairer. Families are better off. Both daughters are better off watching their mother have more money. Sons are better off as well. Markets are fairer. Nonprofits are better off. And one thing we love to say at Ellevest is we haven't found anything bad that happens when women have more money. And so on top of that, for women themselves, it is a point, money is women's number one source of stress today. And we've had all kinds of focus, at least in the United States, when we talk about women and money, it's really revolved around go get that raise, ask for the raise this way, start your business, work on it that way. And it's all been putting it onto her. And it's all been about getting the raise. Now, getting the raise is important. The gender pay gap in the United States of America is 82 cents to a white man's dollar, slowly closing. But the gender wealth gap is 32 cents to a white man's dollar. For Black women, for brown women, for women of color, it is a penny to a white man's dollar. And the good news, that's the bad news. The good news is that whereas asking for the raise only takes care of part of the money gap and actually also involves her boss. There's my cat in the background just run in to be part of this. But all the biases come into place. When she's asking for a raise, he needs to have taken the unconscious bias class that says that she deserves to not have the gender pay gap that implicitly exists, et cetera. But when it's the gender wealth gap, the difference between the gender pay gap and the gender wealth gap is that she's not saving as much as he is. She's not investing as much as he is. She's got more credit card debt than he does. She's got more student loan debt than he does. The rate on her debt is higher than his. And so there are a number of things happening between the gender pay gap and the gender wealth gap where she can take action on her own. And in fact, the very taking of action on her own, getting the credit card debt paid off in the right order, beginning to invest, are things that are if money is her number one source of stress, then her number one driver of her confidence in her ability to achieve her future goals is taking action on her debt and taking action on investing. And P.S., for all that we talk about that gender pay gap, for some women, their gender investing gap, the fact that they invest less than men do, even on a like-for-like basis, even given their less wealth, putting the same percent of their balance sheet into the equity markets, their gender investing gap for some is as big as the gender pay gap for some. And so these are not small actions that women take. These can be big, significant actions that can drive their lives forward. Now, a number of folks I mentioned have tried to get women to invest more. There have been any number of initiatives in the United States, all of which have really fallen flat. There have been any number of startups, all of which have fallen flat, with the exception of Ellevest. And I think the reason that we've had success where others haven't, that we are igniting all kinds of brand love in the United States, that we are so quickly growing, is we've done a handful of pretty straightforward but pretty important things in building Ellevest. Number one, as other folks have looked to engage women with their money and engage women in investing, they have really posed, I think, the wrong problem to themselves. And they have really posed this as a marketing problem, in which it's been, how can we get women to change their behavior? Given that women are risk averse, how can we get them to invest more? Ellevest was really the first that said, well, it may be a marketing problem. And certainly we need to employ marketing tools to find and engage with these women. But it may also be a product problem. Because one hypothesis as to why women don't invest as much as men do is that they might be risk averse. Another hypothesis is that the industry, when they've engaged with the investing industry, where in the United States, 99% of investment dollars are managed at companies owned by white men. 98% of mutual fund dollars are managed by men. 86% of financial advisors are men, where she sees a wall of men. She loves men, but she doesn't see anyone who looks like herself, where the industry has been about trading and buying low and selling high and picking this money manager and watching CNBC. And the industry symbol is a bull, which is a very male symbol. What we approach this with at Ellevest is said maybe it's not a market, maybe it's a product issue. And maybe women have been holding back from buying the products because the products haven't appealed to them. Maybe men haven't meant to, but in an industry so strongly dominated by men, have built a business by men for men. So that was number one. Maybe this is also a product issue where we may want to change the underlying product and perhaps, one example, take it from being about simply making more money to reaching one's goals, identifying, quantifying, and investing in order to reach one's goals. The second thing, and this sounds simple, but is pretty profound, as we did our research, we actually listened to women and acted upon what they say. Let me tell you what I mean by this. Survey after survey, when you speak to women and say, when it comes to your money, what would you like help doing? And women tend to say, number one, I'd like to earn more money at work, again, because they've read this book about asking for the raise. After which financial services companies then take that information and essentially say, would you like this savings account? Would you like this insurance product? And women say, okay, I guess, if that's what's on offer. And Ellevest is one of the first to say, let's bring executive coaches into our business then. While it's across the traditional silos, if this is something that women are looking for, let's not be just a financial products company, but help solve this other problem. Let's not be just a product, but also an education company. The third thing is, in addition to listening to her, we watched her. We took a design approach, a very respectful design first approach when we were building Ellevest, and had some very interesting and often subtle findings. For example, in onboarding into an investing product, you get to a point typically in most products in which the question is asked, what is your risk tolerance? The gender difference most people think is that women have less, are less risk tolerant than men. What we actually found is when investors come upon that question, no gender really understands what their investing risk tolerance is in the moment. They do when we're back in March of this past year, they do in 2007, 2008. But when you ask them the question, they don't truly know. The gender difference is men will attempt and answer the question. The man will put something down and continue into his onboarding process. Women will leave. Women will say, you know what? I don't quite understand what it is. Let me go figure this out. Because what women have been socialized in the US is to work to answer the question correctly, to get A's. For those of us who are in the United States, we understand when we have sons and we have daughters, sons tend to come home and say, I got a B on the test. Yes. Daughters tend to come home and say, I got a B on the test. Oh no. Oh my gosh, I should have done better. And so recognizing that when asking the risk tolerance, that is a point at which she exits the product to try to learn more. It's a different problem that we were working to solve than simply a problem of women are risk averse. Let's try to change what they do. By the way, I love to say women are not more risk averse than men. Our research at Ellevest shows that women are more risk aware than men and want to understand risk before they take it. That's the gender difference. Not that they won't take it. We find women will take on quite a bit of investing risk at Ellevest if they understand what that risk means, and not the standard deviation or drawdown risk. By what that risk means is how much could I lose when things get tough. The fourth thing that we did is we tried to let go of old truths in the investing industry. One of them is impact investing, values-based investing. The old saw that, well, you have to give up return in order to invest for impact. That is changing, but until a couple of years ago, it was very much the stated as fact. This harmed women because just as women are more likely to look for impact in their work, oh, I love that job. You know, of course I want to make X amount of money, but women will tell you the most important thing to them in their job, if they are privileged women, is the impact that they can have in their job. The same in their investing. And these numbers have shifted a bit, but as of a couple of years ago, something like 86% of women in investing said they were at least interested in learning about impact. Just 8% of financial advisors had even spoken to them about it. And so here is a motivator to get women investing. I can not only look to earn a financial return, but also a social return that for women had been taken completely off the table. And so not holding to the old view of, you have to give up return, because the industry has matured enough that one doesn't necessarily have to give up return, and giving women what they're looking for. And the final thing that I would say is holding true to our mission. That one of the reasons that women get just 1% of fintech funding over the past 10 years in the United States, is the biases in the moment. The, gosh, you don't look like a fintech entrepreneur to me. And gee, here's my bias that says women won't invest and they're not good with money, so I'm not going to fund it. But the biases build up in many years prior. And if that, ideal fintech executive has either financial experience or tech experience, and ideally both, those industries tend to be made up more of men. And so the industries themselves do not produce a lot of women. And therefore, the new industry of fintech does not produce a lot of women. What we did at Ellevest was worked really hard to be authentic to our mission from beginning to end. And that building a company where our investors are women and our allies, our venture capitalists, many of them, whether it's the Melinda Gates of Pivotal Ventures, who's an investor, Penny Pritzker of PSP, the Allraise venture capitalist, the #1 investor in women CEOs for impact, Rethink Impact in the United States. Our company is 75% women, 50% plus people of color. So we have women and our allies investing in a company that looks like our user base, helping women invest, oftentimes investing in other women. And in this way, we look to unleash the power of investing from these investors all the way to impact investing over here. And I'll leave you with one other thought before I go, which is another way that we should change our thinking. That as we have been thinking, at least in the United States, women aren't good with money. So therefore, let's leave this to the men. Let's not fund businesses for the men. Another sort of bias that came out when we launched at Ellevest is that for women. That when we launched, we said we are for women, by women, invest like a woman was our early tagline. And so we definitely saw that, women don't want to invest. But what was really also interesting is the for women, by women hit a negative chord. And that some double-digit % of women, when we launched, said, for women, it's going to be a marketing thing. It's going to be a junior varsity thing. It's going to be a dumbed down thing. It's going to be, look at us women together, being women together, investing together, yay. When they then went into the product and looked at it, they said, oh my gosh, this is quite sophisticated. The investment portfolios it puts together are highly personalized. The investing algorithm is the only gender-aware investing algorithm. Super important if you're a woman, because you die later, you earn less. Those issues need to be taken into account in an investment and certainly in a retirement portfolio. And so we had women who went in and came back out and went to Facebook and said it is more sophisticated. But what was interesting is that it wasn't just the men who said it's going to be junior varsity. Not one single solitary woman said this is for women. It must be better. It must be more sophisticated. It must be something that is cutting edge. And so we at Ellevest are trying to change a lot of things. We're trying to get more money in the hands of women through investing, through taking hold of one's debt, through earning more at work. And we're trying to really bust through the old myths of women and money don't belong together, and for women is an inferior offering. And so I hope I've given you a few things to think about at this FinTech Festival, and in particular, how a key to economic growth is getting more money in the hands of women. Thank you.
You certainly have, Sallie. A fantastic presentation. Thank you so much for that and all of that knowledge that you shared. And I really enjoyed something that you said very early on, which was only good things happen when women have more money. Our huge thanks to Sallie Krawcheck for such an empowering presentation. And I do look forward to what else Ellevest can achieve in allowing women to continue to be business owners around the world. Very early where she is. So great that Sallie could join us.